The first half of the year in sustainable investing has been nothing short of a whirlwind. Policy shifts, market volatility, and an administration that's put sustainability and climate change front and center. What can we expect for the second half of 2025? We're going to get into all of that and a lot more right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you very much for joining us here in the studio. Tiffany and Amantia from the Sustainable Investing team are back here in the studio with me. Good to have you both here. I felt like we just had you on a couple of weeks ago, and within that conversation, there was a talk around the defense sector and how the defense sector, especially in Europe, as you were saying, Amantia, is being considered for sustainable investing portfolios. It seems like SI is continually changing. Sustainable investing is changing. And that's one piece of evidence of that. The conversation is now kind of shifted to new policies, especially with the current administration in the White House here in the US. How are clients responding to all of this? Because it can be, as we said in the intro, a little bit of a whirlwind.
Yeah, it truly is, Anthony. And I'll say, we'll talk about a few of the questions that we're hearing from clients as well. But it's funny, we're recording this in July, third week of July here, to talk about CIO's expectations for sustainable investing. In January also, if you recall, you had Tiffany and Andrew here to talk about expectations that CIO has for SI in 2025 and beyond. And what's been interesting is this whole whirlwind really has had everyone review what we expect on sustainability. And in the first half of the year, the number one question maybe that we're hearing from investors on the SI team is, can I still invest sustainably? And so we want to get that out of the way, right? Even though there's a lot of activity, which may seem like negative headwinds, and there's some continuing tailwinds on sustainability, the answer to that question, at least is simple and it's clear, is there's no objective reason, there's no rules, there's no executive actions that prevent anyone, especially private investors, from investing with a sustainable investing lens. So that is the number one simple answer. All the other things start with some depends that I think we want to kind of get into here.
Right. There's all like the offshoots and the caveats, right?
Exactly.
Of course. Thank you, Amantia. Yeah, we really have talked a lot for obvious reasons about policy over the last few months. Even obviously last year, we were comparing both parties and both candidates. Now we know obviously the policies that have been laid out before us, including the executive order tracker from CIO. We've talked about that on the show here as well. What impact has sustainability, when you kind of look at all that, and sustainable investing had from the first half of the year? Because today, eventually we're going to get to what does the second half look like, but for the first 6-7 months, what does that look like?
I would definitely say, as you mentioned, policy has been a really big part of sustainable investing in the first half of the year. So a lot of the volatility around policy led to a lot of pressure on valuations earlier on in the year. And, as we sort of talked about earlier, there were a lot of executive orders that came out in the first half that had a lot of broader sustainable sort of implications on the environment and on sort of the social side. But those in the end have not necessarily had long-lasting we'll say sort of sustainable investing implications, right? So as Amantia mentioned, definitely still plenty of opportunities to invest sustainably. What we did notice, though, is that as we're looking past sort of more of the executive orders, but looking into laws that have been enacted, so thinking about the One Big Beautiful Bill Act that was recently enacted, a few weeks ago, that has had a bit more pressure on solar and wind developers. And that's primarily because we're seeing a little bit more pressure on foreign sourcing and on the restrictions related to foreign sourcing and how that challenges eligibility of tax credits, and then also seeing a bit of sunsetting of some of the tax credits from the IRA a little bit earlier than expected.
Right, and even President Trump has signed over something like 150 executive orders addressing energy-related regulation repeals and increasing access to oil drilling. I mean, clearly that is something that I'm sure sustainable investing investors will look at, and that's why I'm sure these questions keep coming up. Is it still a viable investment for me, considering that the administration looks like they're going into a different direction than where we saw with green bonds in the last 4 years, things like that. And since the last time we spoke, Amantia, I think obviously there's been a lot going on. When you look to the second half, so now we're going to get to that part of the story here, have your expectations changed? Because we do know a lot more than we did even last month when you were here, although there still is uncertainty. It's like the word of the year, I think, is uncertainty, right?
It might be, yeah.
It certainly could
We'll
be.
see.
Yeah, it's uncertain to know what the
Yeah,
word of the year will be. Bingo. What are you watching for? What do you think could potentially change, and what are you looking at to determine what the second half for SI could look like this year?
Yeah, great question. I mean, a couple of things. So number one, you said policy, and then Tiffany jumped on and answered a question about U.S. policy. Of course, we care to watch U.S. policy as investors in general. But really, let's not forget about kind of the meaningful impact, no pun intended here, the sustainable investing asset owners have when it comes to those that are domiciled or investing kind of in Europe, from the UK to Switzerland to broadly the European continent, right? That's a bulk of the asset that really matters to this space. And the impact of EU policy is another one that we're watching. The European regulators have gone almost in a different direction. They're requiring more precision around that term ESG, around the term sustainability and impact. And what you're seeing on the screen here is the fact that a lot of managers that offer strategies with titles around SI, ESG in Europe have changed those titles, especially in that Q1. That's the final bar on the chart. Now, that has been another source of uncertainty for the market. Now, as we go into, well, we're already in the second half, but towards the back end of this year, hopefully some of that will subside as European investors start to understand better where the policy direction is going. Still questions there that we're going to watch. So that's one important thing. There's other regulators, right? You're following some of them.
Right.
Tiffany?
I was even going to say, if we look beyond Europe, we're seeing a lot of positive movement in the APAC region. So Australia's Labour Party won their election in a landslide earlier this year, and we think that's going to bode well for encourage investments in renewable energy, the energy transition, et cetera, in Australia. And then obviously China and Japan have been making really strong moves. China in the EV market as well as clean energy. And then Japan with launching a $1 trillion green transformation plan. And part of that is issuing over $140 billion in sovereign transition bonds, with some of those proceeds going to R&D related to clean energy, renewables, et cetera. So still a lot of exciting work in the sustainability space.
And according to CIO, back to the name change that we were just talking about, Amantia, it looks like portfolio managers and they're changing the names, not the methodology behind those funds. Do you think that the name change was a knee-jerk reaction to policy shifts that are happening in the U.S.? Or it seems like, because it's happening in the European Union, it's just interesting to see that that's become a thing that's happening with SI. It's changed the names, but not the methodology.
Yeah, very interesting, completely different and almost opposite drivers here that look like they're having the same outcomes, right? So in the US, maybe one thing that we're seeing CIOs talked about is green hushing. I think we've talked about it together with you, Anthony, is this concept where companies, but also managers, do the thing that they were doing before, but they don't talk about it, right? So dampening down and really focusing on fundamentals. However, in the EU, some of this name changing is because the European regulators required additional stricter criteria. So if you call a fund ESG, then you have to maybe apply some exclusions that managers were not willing to implement, right? So it doesn't really, it's only unfortunately timed together with this green hushing kind of momentum. Another thing that I'll note is we're spending so much time on policy, but really one thing that we're excited about is to think about what the broader CIO team is driving in terms of longer term investment opportunities. They're talking about the transformational and innovation opportunities, about longevity, about power and resources, about AI. And while those are not explicitly SI, I, as a sustainable kind of focused investor, or anyone who has this interest, can find ways to implement that really point to what are these long-term fundamental tailwinds as opposed to the short-term maybe headwinds that we're seeing.
Right.
And I think one thing that's really important there is sort of when we think around solar and wind and that renewable energy, that's where we see a lot of opportunity in that power and resources category. And a lot of that is driven by AI. So we see those two themes really sort of playing off of each other to be really beneficial in the sustainable investing space. I know we've talked about it before. I'm sure CIO has also talked about it plenty. But there's going to just be so much increased energy demand from AI, right? And we see renewables as having a really strong opportunity to play a role in providing that energy because, as we know, a lot of renewable energy is more cost effective than gas in most of the US. And it can sort of be stood up from conception to commercial service much quicker than some of these larger, maybe natural gas turbines, things like that. So it definitely plays a role in making sure that we can meet that energy demand.
Renewables for sure. Electricity demand is also expected to increase exponentially in the next few years. Right. Thanks, Tiffany. Before I do want to ask this before we wrap up, though, because we are talking about second half expectations, but maybe we can even kind of open the shutters a little bit more and look a little further out, because something interesting, and we have a chart that we can pull up. If you look at this chart of talking about sustainable policy uncertainty, it reached an all-time high in the first quarter of this year, I think for reasons that we're talking about here. Policy shifts, different administration, different focus on green bonds and green energy. But it's at an all-time high. As long as this index has lasted for 20 years, it's at an all-time high, and by a lot. So the question then begs, again, almost back to what we were talking about at the beginning, Amantia, what is the future for SI, given that there is so much uncertainty around it right now?
Yeah, I mean, a couple of things. So number one, if you, hopefully this index helps anyone who's thinking, oh, am I imagining all of this, right? And so this is an academic exercise, but in some ways it quantifies it, that a lot of things are open and in play now. So that's one. Two, forward-looking, really what we're saying are two things. Now, focus on the investment fundamentals. That's why we're kind of bringing it and connecting it to those CIO kind of led trio, longer-term kind of opportunities, right? Think about where that intersection is between financial returns and sustainability in the way that we think about in terms of people and planet in SI. And then also, maybe to give an analogy here, let's see if this analogy works. We all, make choices about our clothing, right? You go into your closet, and whether you're someone who's really focused on thinking about the kind of fibers, you want recycled materials, or you like to kind of whatever, you don't care about that, that's something that you'll buy, whatever you think fits well, you still will look at the season. Even if you want to buy recycled clothing, you will buy summer clothing in the summer and winter clothing in the winter. Apply this to SI. If CIO is now saying, think about US stock opportunities, then you can do that with those recycled materials, right, with an SI version. And if you're a traditional investor, then you will not look at kind of those fundamentals, you just look at the broader allocation. So let's not forget that sustainable investing is investing, follow those broad allocation terms, and there will be opportunities in SI.
Thank you very much. I love that, and actually it resonates a lot, because I think also what we continue to forget is there's the performance factor when you're looking at investing, because yes, it's great to do good with the values that you hold with your individual or your families, or however you decide to invest, but people are still also looking at performance over time, because at the end of the day, we're investing for our futures, and so that's important to look at as well, and certainly a conversation that anybody could be having with their financial advisor about what's right for their portfolio. So thank you for that.
And in the season.
That's right, exactly. We're in the height of summer season now, so think about your portfolio in the summer way, but prepare for fall and winter.
Exactly.
Something like that. Yeah, thank you very much. Great to see you both, Tiffany and Amantia. Great, thank you. And for more information on everything we talked about today whenever it comes to sustainable and impact investing, plus all of the publications that are coming from the Chief Investment Office, you can visit our website. It's our Insights page at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. Plus, you can follow the studio at UBS Trending on Instagram. And as always, if you have any questions, as we just said, make sure that you are continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.